This segment sponsored by Foster Financial. Welcome back to another edition of Women's Wealth Wednesday with Foster Financial, and I'm so excited to be joined by Caleb Doan, their Vice President. Good morning, Caleb.
Good morning.
Welcome.
Thanks very much.
Okay, so I'm excited because we're talking about something that we haven't talked about before, and it's all about donor-advised contributions.
Donor-advised funds, yeah.
Donor-advised funds. Okay, first off, what are those?
Yeah, so it's basically an investment account where you contribute to it. It can be invested in the meantime, and then from that donor-advised fund, you can make donations to specific charities.
Okay, so you say it's invested. Where do those funds go? Because I know we talk a lot about retirement accounts and funds going to IRAs and stocks and bonds and all that. Where does this fund sit?
Yeah, so this would be a fund that somebody opens up with their financial advisor or just directly with, a certain custodian like Charles Schwab or Fidelity.
Okay.
But a donor-advised fund, it's something that it's not through your employer. This is through you individually as an investor. And essentially, it's a way for you to be really strategic about your donations and even get some tax advantages there too. So a couple of the main advantages of a donor-advised fund is that you can donate stock into a donor-advised fund. And when you do that, if it has capital gains on it that you would otherwise have had to pay taxes on, if you donate it into the donor-advised fund and then sell it, you don't owe anything in capital gains. So it can be a good way to kind of avoid some capital gains tax that you otherwise would have had to pay.
So when you say donate it and then sell it, you're saying that you can donate the stocks into this donor-advised fund and not have to donate the stock after you put in the donation account?
Yeah, once it's in the donor-advised fund, technically it's been donated at that point, and it's sitting in that fund. You cannot then turn around and pull it back and put it in your account. It needs to go to a charity from then on out. We typically use this strategy for clients who are already donating a certain amount to their church or a charity or nonprofit organization, and then they have this highly appreciated stock that they would otherwise have to pay capital gains on. So, maybe somebody's donating 20 grand a year to their church, and they're just donating it from their checking account. Of course, that's what most people do.
Right.
Well, they might have this $20,000 worth of Apple stock in their brokerage account. Well, what we could do is donate that Apple stock if it has long-term capital gains, put that in the donor-advised fund, and then sell it, use that to give to your church, and then use the money that you were otherwise giving to the church from the checking account and put that in your brokerage account, and then repurchase Apple stock. Therefore, you don't have any capital gains on it. The church still gets the same amount. You've still donated the same amount. We've really just kind of cut Uncle Sam out of the picture there a little bit without having to pay the capital gains. And anytime we can save money on taxes, we certainly like to do that.
Okay, that's so cool. Okay, so of course the capital gain is the amount that you started off, what you gained in interest since you put that money there, that in between. So if you started off putting $5,000 in Apple stock, you turn around and have $20,000 now. That's a $15,000 capital gain that people typically would have to pay a fee. So either 15% on average for that capital gain. So wow. So if you think about 15% of $15,000, that's a lot. So you're saying take that Apple stock, boom, put in a donor-advised account, sell it, you can give that whole $20,000 away without paying a cent of capital gain taxes. Whoa, that's pretty cool.
Yeah, absolutely.
And
so
it's pretty easy. I mean, it's simple to process.
Right. Yeah. It's just kind of the money just takes an extra little pit stop there in a certain account, and then you don't have to pay the capital gains stock. And then kind of the second part of it is the people might say, well, I wanted to keep that Apple stock. I expected it to continue growing, and so I still want that. And that's where we just take that 20 grand from your checking account that you otherwise would have donated to the church, and you put it back into the brokerage account, you rebuy the Apple stock, but now your kind of cost basis on that Apple stock is 20 grand. You paid 20 grand for it now. So if, in a year you wanted to turn around and sell it and there wasn't any gain on it, you wouldn't owe anything in taxes. So that's what we talk about, kind of resetting your cost basis. You're resetting your purchase amount for that certain stock, and therefore it doesn't have any capital gains on it.
But you know how sometimes stock prices go up and down. So is there a chance, like when you bought that stock at the 5,000 and now you're going back to buy it at the 20,000, that is going to cost you more for the value if Apple stock went up.
Well, if let's say you bought 10 shares of Apple back in the day and it cost $5,000. It's not actually what it would, but let's just say for easy math, you bought 10 shares, those 10 shares grew to be worth $20,000. We donate the 10 shares over to the donor advised fund, give that to the church, and then you take 20 grand and buy those exact same 10 shares. So you still end up with the exact same amount of shares in the end.
Oh, so you're like buying it from yourself. So you haven't okay. I think I was thinking if you sell it under the donor advised, do you lose those shares?
Oh, gotcha.
And then you have to repurchase them, and then the Apple stock could be higher. So now you might have gotten it for 5,000 before, but now 10 shares will cost you 20,000 now.
Gotcha. No, yeah, we do the donation and the repurchase kind of at the same time, so that you're paying the same amount for those shares there. So
that's really cool.
So really, I mean, in the end, you end up avoiding capital gains is kind of the end result there, which is a really nice benefit for people. And the nice thing, when you put money into the donor advised fund, you get to write it off on your taxes in the year that you put the money in there. So, let's say you only typically donate to the church $10,000 a year. Well, we could still move $20,000 into the donor advised fund, and then you get to have a deduction of $20,000 on your taxes in that year if you're itemizing. But you could donate to the church over 2 or 3 years within the donor advised fund. It's not like it all has to come out immediately. You have the ability to donate over time in that fund.
That's interesting. Okay, so who qualifies for one of these accounts? Is there that specific age range and loops?
Right. Yeah. No, this account is pretty wide open. Okay. So really anyone can do it. You don't have to be over a certain age. You don't have to be retired or anything like that. Anybody can use this. So we have young people, retired people, working people. Anyone can use the donor advised fund, but of course it's most advantageous for the people who are already donating a certain amount, right? So it's a good way to save on capital gains.
Yeah, and then is there a minimum or max that you can have in that account or that you can donate at one time?
It's a good question. Yeah, within 1 year, there are certain kind of maximums on how much stock you can donate and how much cash you can donate as a percentage of your adjusted gross income. They're relatively high, so people typically don't end up hitting those.
Okay.
But we're always strategic with clients to make sure that we're kind of staying under those certain maximums.
Okay, but there's no minimum.
No minimum. Yeah.
All right, very cool. Thank you so much, Caleb.
Yeah, thanks for having me.
And if you would like more information about Foster Financial or really need help walking through your financial portfolio, then Foster Financial is the perfect choice. We'll actually put their contact information below so that you can give them a call, and I'll see you after the break. This segment sponsored by Foster Financial.